The Fed's minutes rise in yields of US Treasuries, a plunge in the bank stocks pushed the benchmark indexes down yesterday. The new day could bring both positive and negative news. Wall Street aims to open the New York trade in the green. On a Wednesday, the major stock indexes again fell prey to the Federal Reserve and rising yields of the US Treasuries. As a result, the three indexes closed in the red. The S&P 500 looked the sharpest two-day drop since April. The Dow Jones sank by 180 points or 0.52%. The Nasdaq tumbled by 1.5%. The S&P shed 33 points or 0.76% to close at 4,404 points. The index lost 1.9% in the last 2 days. Futures on the US stock indexes rebounded from their lows in the pre-market. They added 0.2 and 0.3%. The S&P is expected to trade in the intraday corridor between 4,390 and 4,460 points. Wall Street closed lower on a Wednesday after the Fed's minutes revealed that the policymakers diverged in their views on further rate hikes. The minutes of the June policy meeting showed that most officials still gave priority to the fight against inflation. This arouses uncertainty among investors about further policy moves. A few policymakers indicated risks for the economy in the case interest rates increase too high. The minutes look outdated as they underscore a gradual slowdown in the US economy. However, the fresh data defies a slowdown. For this reason, expectations of the peak interest rates have not been revised. That's why traders' bets on a pause in the Fed's rate hike in September declined to 86.5% from 89% a week ago, according to the FedWatch tool. In the corporate sector, bank stocks added losses with the S&P 500 banking index down 1%. The Bank of America suffered the worst losses, shedding 2.2%. Nvidia also reversed early gains to close at 1% lower, despite yet another upgrade from the Wall Street rating agency. Shares of Target rose by nearly 3% after the major retailer beat estimates in the second quarter. On Thursday, Wall Street futures went up after Walmart and Cisco reported upbeat results. Walmart raised its guidance for the full year and beat sales estimates in the second quarter, lifting the company's stock by as much as 3% before the opening bell. Walmart's results followed higher than expected earnings from Target and Home Depot earlier this week, marking an upbeat second quarter for major U.S. retailers. Cisco Systems added 2.4% in the pre-market trading after the network equipment maker surpassed estimates in its fourth quarter results, and its CEO spoke about the possibilities of the artificial intelligence. Encouraged by optimistic retailers, the stock market was disappointed by a weekly update on unemployment claims, which proved the health of the labor market. In turn, this dampened the hope for a pause in monetary tightening. Initial jobless claims fell to 239,000 last week versus the expected 240,000. Yields of 10-year Treasuries printed a 10-month high today, whereas yields of 2-year Treasuries, which are viewed as a barometer of the short-term expectations for interest rates, decreased to 4.94%. In addition, Nvidia shares were up 0.9% before the opening bell. Shares grew this week as the analysts raised their price targets ahead of the chip maker's quarterly results later this month. Besides, two other Wall Street rating agencies upgraded their ratings on the stock on Thursday. The currency market is not on the side of the US dollar, and the advance in the euro and the pound sterling pushed the US dollar index 0.25% down to 103.10. The index is likely to trade in the intraday Canada between 102.70 and 103.50. Despite the intraday weakness of the dollar index, the US currency certainly deserves attention. The US dollar rallied again on a Wednesday, extending its growth for 18 sessions of the last 24. It's on a track for its fifth straight weekly gain. It will be its best performance since April-May last year, and the Fed minutes a strong labor market and the latest macroeconomic data on the robust consumer activity promise further growth for the dollar index. Despite the fact that today the index retreated a little, its medium-term prospects are clearly bullish. Still, the instrument may close the week in a sideways channel due to the lack of significant news from the United States. The Canadian dollar is trying to gain ground after another plunge on a Wednesday. The USD CAD pair traded at 1.3415 in a midday and 0.14% lower. The intraday Canada is determined between 1.3470 and 1.3540. Oil prices, which were to blame for the loonie's fall yesterday, have rebounded today and helped the loonie recover from its lows. Oil prices surged today after the People's Bank of China tried to stem mounting pessimism about the domestic real estate market and the broader economy. Brent crude futures climbed by 0.8% to trade at $84.18 a barrel, and WTI futures jumped by 2.1% to trade at $80.31. The Energy Information Administration reported yesterday that crude inventories contracted by almost 6 million barrels last week in the United States because of active exports and refining rates. The crypto market is trading in the sleeping mode. Popular assets have been hit by robust sell-offs for the second day in a row. It's hard to predict the bottom. Bitcoin lost another 2% today and slipped to 28,350. Popular altcoins are trading mixed. Ethereum, Solana, Ripple, Cardano and Litecoin are wavering between dips over 1.7% and gains of 1.3%. The crypto market plunged yesterday after Binance announced the closure of its Binance Connect services. The news was cheered by Bitcoin sellers, and today the UK Financial Conduct Authority has introduced new rules for cryptocurrency transactions. Following the decision, PayPal suspended purchases temporarily from October 1, 2023 until early 2024. This interruption is in line with PayPal's commitment to compliance and its cooperation with the global regulators, which also hurt market sentiment on the top crypto assets. As for the intraday outlook for Bitcoin, the token successfully reached the bottom of the range determined on Wednesday. It seems that today Bitcoin is determined to decline to 28,200. If it cannot settle at this level, the asset will drop to 27,900. The alternative scenario looks like a recovery up to 28,650 and 29,200 on the condition of a good news. InstaForex team has been monitoring all market news to present you with the accurate analysis. Your feedback and comments will be appreciated. See you online tomorrow.